On. Good evening, hello, and welcome to another SEBAversity Sunset event. My name is Marcel Harman and I'm your host tonight. Today's SEBAversity event is about trading derivatives in the digital asset market, and I'm so glad we have the top shots of the industry together here tonight in one call talking about this really interesting topic. But first things first, and I really encourage you to join the SEBAversity community on SEBAversity.Swiss. What is SEBAversity? It is the non-profit and educational arm of SEBA Bank, the SEBA University. It's all about education and demystifying crypto. We have an amazing content, videos, blog posts, regular education events, just like this one, recorded just for you. We had Polkadot with us, MME, the Crypto Value Association, and many more. We also work together with universities such as the Frankfurt Business School, the University of Zurich, the University of Applied Science of Lucerne, and many more to come. We provide the content, the knowledge pieces in various levels, the curious, the explorer, and the natives. And I think it's really worthwhile to check out SEBAversity.Swiss. And thank you so much for your attention. And saying that, I'm going to hand over to Andrea. Andrea, you're presenter. The floor is yours.
Thank you, Marcel. Thanks for holding this space for us tonight at SEBAversity, and thanks everyone for joining us tonight to watch our event, and also a big thanks to our participants tonight. I'm very excited and very happy to welcome you to the first public derivatives trading event at SEBAversity. We have tonight a lineup of senior presenters from leading global players in the derivatives markets. We're tonight bridging the traditional world, institutional world, and the digital alternative space with our presenters. The topic and the connection is digital assets and the crypto derivatives. I'm as a trader of these markets, I'm excited that these four platforms tonight are presenting, and these are the ones that I would want to have in order to be able to trade and play in these markets. And also as a co-host, I'm excited that we can introduce you today to these platforms and to the capabilities that exist already in the crypto derivative space. With all that, let me just quickly go through the program tonight. We have Tim McCourt from CME Group, a senior MD, who is going to be talking to us about all the exciting stuff that CME is doing in this space, how they're bringing in institutions into the crypto, into a Bitcoin derivatives market, and how they built up the biggest futures trading platform today. We have Zane Tackett from FTX, who's also going to be telling us how FTX is bringing innovation into the Delta One product space with all of the exciting swaps, sector swaps, and how they're quickly throwing out new instruments that people want to trade, and allowing them to do that in a leveraged way with their platform. And last but not least, we have Luke Striers from Derribit, and he's going to be telling us about the platform that actually was the first one to open up and to trust in Bitcoin derivatives. And today they have the leading volume platform, mainly focused on retail trading Bitcoin and Ethereum options, together with many cool tools for the traders. Me, Andrea Čobilić, I will present for you what SEBA Bank has built, the capabilities that we are bringing. We see ourselves not as a competitor, but rather as as a complementary player in this network of derivatives capabilities. And I will show you what we have built and what we have in the market today for SEBA Bank. SEBA is one of the first banks in the world that has a regulator license to deal in crypto products and derivatives. And we also see ourselves as a bridger and as an innovator in the derivatives market. And so we have a hot market now, Bitcoin. We have a hot topic, and we have a really great lineup. And so I will quickly go through the agenda that you've seen already. We'll start with Tim McCord of CME Group, followed by Zane Tackett of FTX, followed by Luke Streers of Derribit, and then Andrea Čobilić of SEBA Bank. There will be a short Q&A session after each presentation, quick 1 or 2 questions, and then once we all finish, we will go to a final Q&A that will be moderated by our host, Marcel Harman. Please, all the speakers, when you're not speaking, mute yourself, switch your cameras off except the presenter, and when we go to the final Q&A, you can unmute, and keep in mind that this event is recorded and will be published later. So with that, I turn it over to Tim McCord. Welcome, Tim, and have a good one.
Great, thanks, Andrea, and thanks everyone for joining today. Looking forward to today's conversation. For those of you who don't know me, my name is Tim McCord. I'm Global Head of Equity Index and Alternative Investment Products at CME Group, which is a regulated derivatives, futures and options exchange based here in the United States, where we offer products, futures and options in the 6 major investable asset classes, as well as cryptocurrency. So I'm going to share a presentation and give you a little bit of background of how CME got involved in cryptocurrency products and give you an update on how things have been going with respect to our Bitcoin futures and options on futures at CME Group. So when we look, make sure the screen is up, great. Just a slight disclaimer our legal folks always like us to have. And I just wanted to start by giving a little bit of background of how we got into Bitcoin and how we got into the derivatives. It actually started back in November of 2016. A lot of our product innovation and design efforts at CME Group are in response to solving customer problems, addressing clearly articulated risk management problems by our customers, and working with customers in the community to help them introduce new risk management tools, capabilities, and to access markets that they want to either deploy their trading strategies or their investment thesis in. And Bitcoin and cryptocurrency was certainly one that increased in interest level back in, certainly from our perspective, 2015, 2016. But the first step was we were hearing from customers is they wanted to understand and have a reference rate that, or a price indication that clearly articulated what is the US dollar value of Bitcoin at a given time. And that's why we first started on the Bitcoin reference rate, or the BRR. It's known with our partners at CF Benchmarks, formerly known as Crypto Facilities, in deploying and designing the once-a-day reference rate that depicts the US dollar price of Bitcoin. What's interesting in this design is important for us, like a lot of the other financial futures contracts we have at CME Group, other index contracts, is that there was an element of convergence between the Bitcoin reference rate and the underlying digital asset market, the spot market. And that's why this reference rate was designed to pull in transactions from some of the largest underlying Bitcoin spot trading exchanges, and the Bitcoin reference rate, as well as the Ether reference rate that we have, pulls in transactions from Bitstamp, Itbit, Coinbase, Gemini, and Kraken, and represents on any given day be as high as 50-60% of the Bitcoin dollar fiat trading market. And it's really important that we have a robust underlying index to the futures contract, because that is what the contract will settle to. It is not only designed in line with the best practices of IOSCO and other index guidelines, but it's actually, the Bitcoin reference rate is now a regulated benchmark under the European BMR rules, and is a regulated cryptocurrency benchmark, so something we're also excited about. So when we look at then introducing products or introducing futures on top of that reference rate, we launched futures back in December of 2017. We're actually coming up on the 3-year anniversary next week. Exciting to see that it's been 3 years, and a lot has changed over the last 3 years, but we've been really pleased with the volume that we've had in the contract. What you can see here is when we look at the growth of the contract, it's really been driven by the continued institutional adoption of our contract. The futures contract at CME has a 5 Bitcoin multiplier, so it's every one contract giving you the exposure of 5 equivalent Bitcoin. It financially settles, so you're only moving US dollars. You're not actually transacting or moving in the digital asset, which was a design feature that we worked with customers because a lot of folks wanted access to cryptocurrency, but still have limitations on their ability to handle or invest in digital assets and cryptocurrency. So using a financially settled future to access that market was a design feature and settles to the Bitcoin reference rate. A few things to note about the volume and the growth that we've seen is when we look at the average daily volume here in 2020, it's a little over 8,500 futures contracts. So again, we're talking just shy of 45,000 Bitcoin equivalent per day. But what's been interesting here in November, so last month in November, the last week of November, we did almost 20,000 futures contracts per day on some of the recent price movement. A little under 20,000 was equivalent to just a touch over 98,000 Bitcoin per day, which lifted November of 2020 to the almost 11,500 futures contract worth just shy of 58,000 Bitcoin per day. That was our best month of 2020 and the highest since May of 2019, where we also set the single record day for trading futures volume at CME at a little under 33,700 futures contract. So again, quite substantial number of Bitcoin, over 155,000 Bitcoin equivalent trading that day. So it's great to see the trading volumes materialize at CME. I think certainly a strong sign of adoption. But when we peel back the onion a little bit, it's great to have volume, but it's even better, in my opinion, to have open interest growth in the Bitcoin futures contract at CME. When we look at how average daily open interest has grown on this slide, those are the blue bars. But what's also important to note is the average large open interest. A large open interest holder request. And that is as a CFTC, we're a regulated venue here in the U.S., but CFTC requires and tracks those large traders. A large trader in the Bitcoin futures contract is a trader that holds a position of more than 25 futures contracts, which will be worth more than 125 Bitcoin. So when we look at the record that we have set here, we just broke the record in the numbers that came out last night. We now have 110 large open interest holders and averaging just under 100 for the entire quarter here so far in Q4 of 2020. What that means is we have 110 large traders who are holding overnight and currently holding futures contracts that are at least about $2.5 million of Bitcoin. So as you can tell, it's a relatively large position to be holding. And the growth and the slope of change, the change of slope that we've seen here in 2020, both in terms of the average daily open interest, which is up almost 130% year over year, and the large open interest holders, really is a testament, I think, to the institutional adoption of people who are investing in Bitcoin, not only trading, not only risk managing, not only trading futures versus spot on some of the other platforms and venues that are out there in the marketplace, but this really speaks to people who are holding Bitcoin via Bitcoin futures at CME, and this is really the strongest proxy and data point we have that shows the continued institutional adoption of Bitcoin futures at CME Group. The next slide, for some of you may not be familiar with the contract offering or the futures offering at CME, just wanted to kind of quickly highlight some of the key features for you to be aware of. Again, these are regulated futures contracts that trade at CME in the United States. So it needs to be traded into a futures account at your clearing broker or your FCM. The contract unit of the future is 5 Bitcoin, so it's 5 times the price of the Bitcoin reference rate is the contract value. It ticks in $5 in terms of outright, so $25 per contract, and it moves in $1 in terms of calendar spreads if you're trading the roll market or outright spreads. Trading hours the contract is available nearly 24 hours a day, Sunday night through Friday night at CME. It's also available for block trading. You can do block trades with a 5-contract minimum. You can also do EFPs, which are exchange for physicals. It's a way if you have the digital asset and you wanted to move futures or trade them against each other and collapse them, you can do an EFP or an exchange for physical, negotiating that transaction off exchange and just submitting it to the exchange for clearing. We offer 6 consecutive monthly contracts as well as the nearest 2 December contracts based on customer feedback just of how far out they'd like to trade the Bitcoin term structure. Earlier this year, in January of 2013, we introduced options on Bitcoin futures. At CME Group, we like to make sure the underlying futures contract also develops a robust market and really hits that critical point of viability to serve as the underlying for futures contracts. We have the options on futures contracts. It's important to note that they deliver the future. The underlying of this contract is the future itself. Right now, the expirations of the options line up with and comport with the futures expiration, so it delivers into the future, which also systematically settles against the Bitcoin reference rate. In terms of the styles of options, they're European in nature, meaning they're only exercisable at maturity. There's no clearing instructions or early exercise features allowed on our options at CME for Bitcoin futures. And the listing cycle of options will also line up with futures, so the nearest 6-month and 2 nearest Decembers. What's interesting to note about some of the options, we look at the distribution of strikes, and we currently have open interest in about 65 different strikes or price levels of the Bitcoin options, with about 21% of that's the open interest being concentrated around the 20,000 strike mark. So just kind of interesting to watch. This is something that we are encouraged by because it's not only about using options as another way to access the market, but we've seen the options used as a risk management tool, which is another signal of the continued adoption and the continued maturation of the Bitcoin market at CME Group. Just on the last slide here, I just want to make our contact information available for the team. There's certainly lots of great resources on our website, cmegroup.com, but you can certainly contact myself or any member of our team for further information. And with that, I'm going to hand it back to Marcel or Andres to take on, to pass it over to the speaker.
Great. Thank you so much, Tim. Actually, we do have time for one or 2 quick questions.
Oh, great.
Feel free, if someone has a question, to unmute and raise the question directly.
Maybe, can you hear me?
Yeah, we can.
Oh. Hi, Tim. Is there any sort of growth in terms of contracts you offer on Ethereum next to Bitcoin?
Right. Yeah, it's a good question. Right now, we're focused on Bitcoin futures, and that's going really well. We're pleased with it. We do have the reference rate and real-time index on Ether US dollar, so that currency pair. Continuing to engage with the marketplace and customers, we certainly are hearing a lot of demand for Ether futures and just continuing to work with the marketplace on that product design, but no product announcements at this time or kind of expected launch timing for Ether futures, but continuing to work with customers on the design elements.
Okay, so you're waiting a bit more until there's more demand in the market.
Yeah, I would say the demand is pretty strong. We're just working with the constituents to design the product to make sure that it meets the risk management needs for the customers. But I would say stay tuned on that front, but no imminent plans to announce or launch the Ether futures.
Okay.
And Tim,
great. Thanks so much.
May I ask you a quick question here?
Sure, go ahead.
So it's product related again. So are you maybe exploring any Bitcoin future which will be physically settled instead of the cash settled you are currently offering?
That's a great question. We actually have been engaging with the marketplace around some of the design features for a physically settled Bitcoin contract. I think the one thing for us to note is that we don't see it as an either-or decision. Certainly, the current product we offer is financially settled because that largely comports with not only the customer's needs and interests when we started this 3 years ago, but also what we were able and comfortable doing at CME with respect to not necessarily moving the digital asset through our own infrastructure and some of the risks that would entail. That being said, we have continued to hear from customers that physically delivered Bitcoin or cryptocurrency futures is of something that is important and there is need. So we continue listen to customers and figure out if that is something that we can introduce at CME Group, but the plan would be to do it in a way that is complementary to the financially settled Bitcoin futures contract, if and when that makes sense to the marketplace. But that's one thing that CME, I think, separates CME is when we look at the other asset classes and the 180-year history that CME has, we certainly are a leader in development of physically settled contracts. And I think when we get to that point in time and working with customers, we would look to make sure that it comports with some of the other products that we have with respect to the standards, the security, and the expectations that people have for a physical contract at CME. So something we're working and listening to customers on, but right now our focus is on the financially settled version.
Thank you very much for the insights, Tim.
No problem.
Thank you so much, Tim. And for everyone, there is another chance at the very end of the event to ask some question, but at this point, I'm going to hand over to Sam. So it's his part.
Hello. Great. Thanks for having me. And yeah, let's jump into it. I'm Zane Tackett. I help FTX on the sales and business side of things, and I'll be sharing a brief overview of the history of FTX, the impetus for starting the exchange, where we are today in our product offerings, as well as what we have to look forward to in the coming year. So I apparently missed the memo about having slides prepared, so I'm just going to have to win you guys over with my smooth voice and good looks, of which I have neither. So yeah, let's jump in. So Sam, our CEO, had been actively trading in the crypto space for a couple of years. And after experiencing some of the shortcomings while trading on other exchanges in the space, he knew he could improve on what the existing exchanges had to offer and address some of these issues. So in May 2019, he launched FTX. To dive into some of the friction points, one of the main friction points encountered was how other exchanges handled collateral. Many exchanges have separate collateral pools for different markets, which makes managing your margin requirements quite burdensome. Like if you want to trade a BTC market, you have to post BTC collateral. If you want to trade an LTC market, you have to post LTC collateral, so on and so forth. Many exchanges only supported a single asset for collateral. So, if you want to trade S, you still have to post BTC and couldn't post any other crypto or fiat. And very few exchanges allowed fiat to be posted as collateral. At FTX, in comparison, we support over 20 cryptocurrencies as collateral and a wide range of fiat currencies, including USD. And so you can use any of those as collateral to trade on any of the markets on FTX. And there's no need to manage your collateral for a particular position. It's done across your account in total, removing some of that burden from the trading firms. One of the other issues that's plagued future exchanges in crypto is socialized losses, in which large liquidation orders that weren't filled cause the exchange to take on that loss from that position, which it then claws back from traders in profit. So we've seen clawbacks in excess of 40% in the past, amounting to tens to hundreds of millions of dollars. Another downside to this is because of the need to socialize losses, traders need to wait for the weekly settlement cycle before they can withdraw any of their profit. And even on some of the newer, like perpetual markets, you still have to wait for the settlement cycle, which is usually around 8 hours before you can actually withdraw your profit. In comparison, we settle profits in near real time. So traders can immediately withdraw their profit to their own wallet, use it for spot trading, or however they see fit. Furthermore, due to the way that FTX handles liquidations, we've never had any clawbacks or socialized losses. We don't have issues with deleveraging or closing positions of profitable traders, and we've never had a net daily drawdown on our insurance fund. So soon after launching FTX, the market responded to these innovations, and FTX started to capture a significant portion of the market, exceeding 100 million in daily trading volume shortly after the launch, and breaching the $1 billion mark within several months. Initially, we saw a strong uptake among the more institutional players in the space that welcomed an exchange that was addressing the aforementioned issues, as they had also ran into those. We also had the added benefit of pre-existing relationships with a lot of the bigger firms in the space, thanks to our OTC desk, which provided FTX with some legitimacy right off the bat. However, the retail traders who hadn't heard of us before were a bit harder to capture. But as we grew, we started to gain traction with the more sophisticated retail trading crowd, the so-called pro-tail traders. Products such as our Quant Zone, which allows anyone to build trading strategies with little to no coding background, were quite popular among this particular subset of users. And a testament to our more sophisticated user base is our comparatively low liquidation levels, even during times of high volatility. And going into 2020, as our brand became more established and we started to gain a meaningful share of the market, we saw a large increase in volumes from the retail traders. We definitely still have a lot of work to do on this front, no doubt, but as we solidified our position as one of the largest and most innovative exchanges who moves very quickly, I think we'll naturally continue to increase our retail user base. And as to the region of our clients, we see a pretty even split between East and West. This is also represented by our team structure, with a large portion of our team coming from Asia. And one of the keys to our rapid growth over the past year and a half, 2 years, has been our ability to move very quickly and respond to customer demand. So, for example, with the DeFi boom over the summer, we quickly listed markets for the most in-demand coins, like the Uniswap airdrop. We got on that right at listing, or right when it went live, and also Filecoin. With Filecoin, FTX captured over 50% of the Filecoin market volume in the opening hours and traded over 200 million on the day just on that market. And with demand for passive yield on the rise in light of farming and the DeFi boom, we added more ways for our users to generate yield with their assets on the exchange through peer-to-peer lending and staking of FTT, our exchange coin, and also Serum, a decentralized exchange. And so to dig into our product offerings a little bit, at FTX, we support a wide range of assets and products to trade, with over 100 markets in total, trading anywhere from $1 to $4 billion a day across the exchange, just depending on market and volatility. Among our products, the futures are going to be by far the most active and liquid markets on the site. We have futures for pretty much all of the major cryptocurrencies, and more recently added support for futures trading of tokenized stocks. So, SPY, Tesla, Facebook, Apple, etc. We also have index futures, where users can gain exposure to a basket of crypto through a single market. So, for instance, our exchange index allows you to trade a future with a basket comprised of the largest exchange tokens, so, BNB, 4B token, FTT, LEO, etc. And we also have futures for prediction markets, such as our Trump and Biden contracts, which settle to $1 if the candidate loses, or $1 if the candidate wins, $0 if the candidate loses. This got us a good bit of attention during the election and immediately following it, as we were one of the only markets still operating post-election and allowing people to hold positions on whether or not Trump will still be in office in February, regardless of the results of the election. And lastly, we have hash rate futures that miners can use to hedge and speculators can use to gain exposure to the mining side of the crypto industry. In addition to futures, we do also have spot markets and support spot margin trading of up to 10x leverage. And we're currently doing around 250 million a day in spot volume. Users can also trade spot via our OTC desk, either directly with our traders in the chat, using our web interface, or connecting to the OTC platform via our API. In conjunction with spot margin trading, we also launched peer-to-peer lending to provide the liquidity for borrows to spot margin traders. This means that users on the site with idle funds can park them in the lending market to gain yield. And one other product that we were first to market with and received strong feedback from our users and other players in the space was our leverage tokens. These bull bear tokens essentially allow users to trade trade on 3x leverage while maintaining the simplicity of just trading a pure spot token. They don't need to manage collateral to meet margin requirements or worry about liquidations. They can simply buy the token, which tracks the 3x return on a market of their choice. Also on the derivative side, we do have options just for Bitcoin at the moment, but we do hope to expand our options offering in the coming year. So to touch on a little bit of what we have in the pipeline and what we're excited about for the new year, mostly in 2021, we're going to stick to what got us this far, which is listening to our users and building out products that they want to trade, as well as pushing the boundaries of what crypto exchanges can offer. So, we recently went live with the tokenized stocks, which allow for 24/7, 365 trading of these stocks, both on spot and futures. I think this will be a slower grind to get adoption than just getting volume from crypto, but it's definitely something that we're excited about and we'll be putting a lot of focus towards in 2021. We've also been putting forward a lot of work towards redesigning our site and improving the UI UX. This will be a continuous effort throughout the next year as we get the user feedback loops and continue to iterate on the exchange. And then following our success with the election prediction markets, we'd like to roll this out for more events such as sports, esports, midterm elections, and more. We've seen proven demand for this product and have received requests to list markets for a wide number of events. So we're quite excited to explore this and see what we can do here and see what our users want to have exposure to. Lastly, we also did recently launch our FTX US, our US-based exchange that has 10x spot margin trading. Obviously, the US market is one of, if not the largest markets for crypto traders. So we'll be putting a good bit of energy into building out this exchange and capturing some of the US-based flow. We recently brought on the former head of crypto at Robinhood, Sina Nadir, to be our COO at FTX US, and lead the expansion into the US market. So that's a lot of what we're excited for in the new year, and a brief overview of the exchange in general.
Thank you so much, Thane. Very interesting. I'm also going to open up for the public. Please unmute if you have a question.
Zane, Andrea here. May I ask, in this interesting and exciting offering that you have, your approach has been, let's say, from the unregulated side. Are you thinking about how to enter the more regulated market and to make your products available to the more institutional type of user?
So FTX US is one of our efforts to this effect. We are going state by state and acquiring all of our MTLs. However, that'll be just for spot trading. On the futures side, we always try to stay abreast of all the local regulations and make sure we're not running afoul of anywhere and work with regulators. But it just depends on where things go, and we'll react and make sure that we adhere to all the local laws and regulations.
Thanks. Thank you.
My pleasure.
Great. Awesome. Thank you very much, Thane. Again, we have the option for more questions later on, and at this point, I'm going to hand over to Luke. I'm just making you presenter, and the floor is yours.
Thank you. Sharing my screen now. Hi, my name is Luc Strijers. I'm the Chief Commercial Officer at Derribit, and trying to show you some slides if the system allows me. Do you see anything?
Not yet. I had it over the presenter rights.
It jams a bit. I'm not sure what's happening. Can you see me?
Yeah, we can see you. We can hear you. Let me see if I can make you also co-host. Maybe that works. Maybe you can give it another shot. Okay, I just get the notification that there might be a slow connection with Luke. Let's just wait another 10 seconds. Otherwise, I suggest that Andrea, you're going to jump in with your presentation, and then basically just switch the positions. Okay. Yes, I think Luke needs to rejoin, no problem. So I'm going to make you presenter, Andrea.
I'm back. Can you hear me?
Ah. Okay, yeah, you're back. Okay, one more try. 1 second.
Yes.
I'll make you presenter. Perfect. Yes, we can see it.
Okay. I'll rush through.
No
so my
worries.
name is Luke, responsible for all commercial, client-related, as well as product matters within Derribit. One thing I think the previous speakers have not mentioned yet is the current inflows in the entire crypto space. So what we've seen I think at all the platforms is an amazing month during November, where the price of BTC went up significantly because of a lot of good news messages, especially with an institutional focus. I put some together here on this slide. It's just 1 week, but it clearly indicates that what everyone has been talking about for, I think, for a year plus, that institutional money is entering the space, is actually happening now. So there's actual numbers there instead of just confirmations that is about to happen. So, for example, a few of these firms investing 400 million plus last week alone, multiple platforms reaching all-time highs. BlackRock is confirming the potential of Bitcoin, etc., etc. So MicroStrategy announces 400 million of new nodes to be invested in BTC, and the list goes on. So it's been an amazing month. It results in a lot of volatility, which is good for derivatives platforms like us, and hence we see significant growth over the month of November. You see the chart on the right hand of this slide. We grew by 123% in 1 month. And thus far, we've traded 165 billion over the year. We launched in 2016, so we've been around for a while, and the focus has always been on the options side. So unlike many of our peers that have a long list of tradable assets, we tend to focus on options and treat the perpetuals and futures as a byproduct next to our options market. We are around 35 in staff. We have a global presence, so sales is based everywhere. We have developers in Poland. We have an Amsterdam R&D and IP office, and the platform is run from Panama. So, as mentioned, we've seen significant growth as well, measured in dollars as well as contracts. So it's important that it's not just due to the Bitcoin price increase, but it's also actual number of contracts traded. So what does it look like? As you can see, in terms of OI at the bottom, open interest is focused on options. So it's almost 5 billion at the end of the month of November. So it's slightly down now. We have in the perpetuals and futures, we have 500-600 million. So overall, we have 5 billion plus in open interest with a clear focus on options. Options itself, we are number one, unchallenged, I would say. So we have around 80-85% market share, looking at the consolidated market, looking at both volumes as well as open interest. For BTC, those are the levels. For ETH, it's even higher. So we're talking about 90-95%, depending on when you take the snapshot. Again, looking at volumes as well as OI. And that one is simply because it's tradable on less platforms. It's been growing rapidly. So last month we traded 750,000 contracts, which equals 25,000 contracts a day. And a year ago or 1.5 years ago, we traded a few thousand. So I think January 19, we traded 4,000 contracts a day. And our ambition was to reach 10,000 at some point. Last month we reached 25,000. So it's growing rapidly. We see the number of traders growing as well. So it's not just firms trading more because of volatility. It's actually spread over more traders, which is a good sign. We see the majority of trades are done by institutional firms. So unlike the introduction given, I think overall as a platform, we have an institutional focus. So 85% of our volumes are automated. That's not necessarily the same as institutional, but you could consider it somewhat similar. So of course, on the futures and perpetual side, it's a lot of HFT activity. So firms arbitrage strategies over multiple markets. In the Bitcoin options segment, it's a bit different because it's not really arbitrage. It's actual positions being taken, so hence the big open interest. And those positions are either traded or kept until expiry. So what we see there is that there's a lot of interest from traditional finance entering the space. And what I mean by that is hedge funds starting out their crypto fund, spin-offs of all kinds of options traders that are starting their own crypto units on the standalone or subsidiary basis. Retail, of course, we tend to educate a lot. So in China, we have Derribit University really focused on educating people how to trade options because it's quite tricky. We have around 500 strikes at the moment. So, 250 strikes, 500 series for BTC. The same for ETH. So we're looking at around 1,000 tradable instruments. So we need to explain carefully which ones to trade, the in the monies, out of the monies, what does the strike mean, etc. So it takes a while for people to properly understand the risks taken with options. So why do people trade options on Derribit? One of the key reasons would be our portfolio margin approach. So if you buy options and you have let's say, portfolio of multiple options, some longs, some shorts, some futures, etc. Our margin approach would look at the overall position and not as a sum of the individual legs, which makes sure that our capital requirements are lower than many of our peers, and that has proven to be key in further growth. So it's important for market makers as well as the bigger firms to have portfolio margin enabled, allowing a more risk-based approach instead of simply looking at these individual legs. What else is different? We have a dedicated hardware setup. So most crypto platforms are cloud-based. Our servers are based in London, just outside of London in Equinix LD4. We have our own rack, but we also host clients. So if the client doesn't have a rack of their own or doesn't have a cross-connect to wherever they're connected from, we can host them in our racks. We have a gateway from Hong Kong. We have a dedicated backup in Zurich. So this hardware focus is kind of unique in crypto, but it allows us to process transactions faster than the cloud. So if you're cross-connected in any way, which could be using your own cross-connect, your server in our racks, or virtual solutions like via any of our partners, we see a median order round trips of less than a millisecond, which is quite competitive and fast, especially looking at derivatives platforms that also have to perform risk checks for every order. So what else? We like our insights segment, which attracts a lot of attention from media as well as new clients. So there's a lot of research freely available to anyone interested. So those are published by external parties as well as internally. So it's option flows with also external reports about whatever product. It doesn't really matter because it doesn't have to be traded on Derribit. It's simply interesting knowledge. We're changing our UI, so it's already available in beta, and we're launching it soon as a production version. We're working on a VIX index to be launched soon, allowing people to trade volatility using our options market as input for the model. We're looking at launching alt futures soon based on Tether, so USDT alt perps initially. So for example, BTC and ETH, but as well as altcoins like Link or XRP, etc. We're looking at spread books and new order types, and quite a lot of smaller items. And one thing I wanted to mention as well, which institutional firms really like, is our block trade solution. So we have partnerships with 5 firms Paradigm and Skew are the most famous ones, I guess. But you can enter blocks, so negotiated OTC trades over the phone, over Telegram, or whatever way you come up with the trade. You can report them to Derribit for processing. And we also have 2 partnerships with custody providers. So instead of just depositing with us, you can deposit your collateral with Kobo, which is a Chinese firm, or Copper, which is London-based. And we have an account with both firms as well, allowing you to move assets off-chain. So especially at moments when there's peak activity, so there's a lot of volatility, blockchain is congested. What you see is that transactions could take hours. And in those scenarios when the underlying is moving, it could result in margin calls, and you have to top up margins. And if the network doesn't really facilitate that, these could be helpful solutions. So we're adding more. So the third one is being finalized now, which will be announced anytime soon, and we're in talks with 3, 4, 5 others. So there's a lot of institutional demand to keep assets closer to the actual buy-side firm than depositing directly on-chain with the exchange. So we really believe in the custody model. That's a quick run-through of where we are.
Great. Thank you very much, Luke. Also here, I'm going to open up the floor to some questions. Please unmute yourself.
Luke, if I can also ask you a quick one, product related. So first of all, congrats for the massive momentum that Derribit is having. You mentioned the USD perpetual against ALS. Are you planning to add the USDT as a collateral for a Bitcoin option as well, or are you sticking to Bitcoin option collateralized in Bitcoin?
It depends a bit on the success. So if we get a lot of collateral deposited by our clients, so there's a lot of demand for Tether, I think the next steps would be Tether-based futures, so simply aligning a product shelf, followed by, I think, which is the most promising product, USDT-based options indeed. So BTC, I'm not sure. The market depends on who you ask. We can put them next to each other and see what happens. But I think the biggest potential would be altcoin options. So, for example, the same names again as an example: XRP, Link, etc. And a properly liquid options market settled in USDT. It will be less. The duration, the tenors will be less. So I think 1 to 3 months instead of a year that we have thus far. Simply because the market makers are not willing to quote products as far. So we already see less interest in ETH options versus BTC. So we can't get a year of XRP, but we have seen willingness to quote, let's say, up to 3 months of altcoin exposure, which I think is a clear a product that will attract a lot of retail activity, which is perhaps a bit lacking on our platform. We're really excited about all the institutional interest, but we could also use a bit more retail.
Thank you very much.
Great. Thank you very much. And then I think I'm going to hand over to Andrea, unless someone has another question. But we have enough time for questions later on. So, Andrea, I just gave you the presenter. The floor is yours.
Thanks, Marcel. Hi again, everyone. Good evening. My name is Andrea Čobilić. I'm head of derivatives trading at SEBA. I come from a very long 20 years of derivatives trading at the big banks and in the markets and the hedge funds. And I've switched over to the crypto side in 2016. And I'm, very, very pleased and excited that already today, in 2016, when I moved over to the crypto side, we were seeing gaps between different exchanges in Bitcoin of 5 to 10% regularly. And already today, end of 2020, and we have this really awesome capability to trade futures and options on top of Bitcoin and even structured products and volatility products that have been mentioned. So this is super exciting, and also, I'm very happy to have a place like SEBA where it's possible to do the trading the way that it's done, in a let's say in a professional and stable, regulated manner. So I'm going to tell you a little bit about our platform here and how we fit into this landscape of derivatives trading with these really great platforms that are presented before me, who have put together the framework and the basic possibility for both retail and institutionals to access the futures and the options markets en masse, right? And so we are building integrated into that, and on top of that, in a way where we have at SEBA we have a credit and trading platform within our bank, which we believe is it's definitely a unique integrated offering, but we believe it's the best in the world integrated offering, where you can trade spot on crypto, derivatives on crypto, and you can also borrow and lend in crypto in one place. And you can do that with, let's say, care and focus of professionals in the market who can help and who can assist you in the process. On the trading desk, we have 75 years of financial markets experience among the heads of the three lines. And today I was checking actually amongst the species which are the ones with the high longevity. And funny enough, whales pop up as some of the longest living ones. So in financial years, we have a couple of whales and a dolphin running trading lines at SEBA. Where we make a differentiation to what exists already. When you trade with us, you're trading on top of a bank account. Your bank account can hold crypto assets like Bitcoin and Ethereum, Litecoin, Stellar, and USDC. But it can also hold fiat, and we have a wide range of fiat currencies. Dollar, Swiss, Euro, Sterling, Singapore dollar, HKD. We even have Polish zloty and the AED. And so to explain to you, within the SEBA ecosystem, there is no difference between crypto and fiat, except what comes back from the market is liquidity. But in terms of you as a client of SEBA Bank, your crypto and your fiat are equally are equal, and also because we are regulated by the Swiss regulator. What that means is that you can easily get liquidity across, and you can also cash out if you need to, or borrow and lend against this. And so you have a seamless exchange, and you have an easy liquidity and a cash out. So you don't have to worry about things like what happens. It's been hard enough to adopt, for people to get over the hurdle to get into Bitcoin for a while, but you don't have to think what happens if Bitcoin goes to 50,000 or 100,000, which is what we are here for, what we're playing for. With us, if that happens, you're good. You can take your money out, or you can, if you need to, and make your investments, buy property, whatever. We also have a 24/7 risk management positions. So 7 days a week, 24 hours a day, you have a trading desk with which you can. You have a platform that you can access, but you also have a trading desk that you can talk to, and we're happy to help you in any way. I want to quickly show you how our trading tool looks. So this is SEBA Trade, which our clients can have on their desktop. It's the e-trading solution for active trading customers. And as we said before, it's 24/7 live pricing, right? So what you see here on your screen is all different pairs, crypto fiat, crypto, and fiat. And again, there's no difference, right? You can quote them all up. You can quote them up in any size you like, and you can trade with us 24/7. Your trades pop up in a blotter, and you can put orders in as well. So you can put orders in directly yourself, or you can also communicate the orders to us, and then we'll put them into the system. We do have the connectivity, of course, through the API and the FIX. We have through the FIX API. We have something which we call direct access clients. So that means that you have a direct access to the trading desk that I mentioned before. And so we keep this for anyone who's an active trader and who wants that kind of on touch, on point connection with the trading desk, which is experienced and happy to help you and also to talk you through what's going on in the markets anytime. We have the orders and we give you the reporting, as I mentioned before. So to move on from there, what's happening in the derivatives instruments? Well, our first, our most interesting part of the offering is that we do OTC options. We make markets. We run our own book. We do this in Bitcoin and Ethereum on the crypto side. And normally, as you know, Bitcoin and Ethereum, they trade versus the dollar on the derivatives markets. But in case you want to trade options versus the Swiss franc or the euro, sterling, sing, any of the currencies in our offering, you can do that. In order for us to bring this fiat offering to the market, we have a partnership with Credit Suisse, and so we have a very, very strong and steady liquidity in the fiat markets, and we can also bring many new currencies quite quickly. In terms of where are we focusing on the volatility curve, it's 1 day to 1 year focus. It's 1 day to 1 year open, and most of the focus is 1 week to 6 months because that's where the market is. And we go to 5% delta. Now, this is basically where we see the liquidity in the market in the moment, and we're going a little bit broader than that. As the market changes and matures, we're also going to be moving with that. So it's in no way restricted. And the important thing about options that we would write or you would write to us is that you're dealing with a well-capitalized, regulated, and audited counterparty. So these contracts are solid contracts. Secondly, we offer access to CME cryptocurrency instruments. Tim talked about this, about the exciting offering that is there. So, we're active in BTC USD futures and also basis trading, which is really, it's a growing and interesting trade between the spot and the futures on CME. We also offer commentary on what's going on in the markets here. And we participate in the Bitcoin options and futures that CME offers. So we use these instruments as a base for issuing products. In the asset management arm that is also well integrated into our offering, we can issue securitized products with an ISIN, and we can use the CME liquidity for hedging of those products. We also offer the access to select clients through us, and we trade on CME ourselves. So, again, where are we? Where is our value added? Where are we the leaders in the market? We are, we have the expert focus on client needs. We can understand your needs and help you navigate the derivatives markets, not by giving you advice, but by actually helping you understand what it is that you need, and then serving you in that way. With this integrated offering across all the different parts of the market. So if somebody comes to us as a hodler, we often see people who are very, very well versed technology, but are not so experienced in the financial markets, and they can have large stacks of Bitcoin and Ethereum that are just sitting there, and they're looking for ways to improve their yield while they wait for the market to go on. So we understand that, and I will quickly jump to the next slide. You know, we can offer call overriding strategies, for example, where we can analyze different ways to harness the high volatility, high implied volatility that exists in the cryptocurrency market. And on the left here, you know, you can see the difference between the light green line and the dark blue line, where the hodler can improve their yield in case the market is between 18,000 and 25,000 for the next 3 months. You're improving your return by giving up some of the upside. This is just a simple example, but just to illustrate to you what it is that we look at. And then with our OTC offering and focus, and the focus that we have in the markets, we can pick specific maturities, and we can inform you about the specific maturities and strikes that are best for you to express, or for the clients to express their view and to manage their portfolio. We also see that clients want to just keep their Bitcoins and get some return on them somehow. So we can look at different Bitcoin total return strategies. You know, simplest one, lending the Bitcoins out, to more complex ones that involve different trading strategies. I will not go into those right now. I don't think it's for this time, but we have several several things here that we can look at and offer. And of course, hedging of positions, right? So the big run like we had right now. Okay, so how do we play the next 3 months, but make sure that we keep some of the gains, you know? So we can look at different things and help you here to help our clients here to get the desired payoff. Mm-hmm. And we also see new adopters of Bitcoin coming in. You know, people who have been in finance for a while, qualified professional investors who are now looking to enter the market that they don't really understand, and it's highly volatile and unpredictable at times. You know, so how do you get in? So here I think we've issued probably the first securitized product in the world that has an ISIN. We did a dual currency certificate on Bitcoin dollar, where the customers would get exposure to being short the puts, and so while they wait, it's a way to average an entry into the Bitcoin market at a lower price, and get some cash flow while the Bitcoin is holding its value. So it's something that over a systematic strategy over many months will improve the average entry price of an investor into Bitcoin. Here again, different strikes, different maturities. We can analyze this together. We can give you the color in the market, and we also offer to our clients a Bitcoin tracker, and we have one denominated in dollar and one denominated in Swiss franc, and both of these are daily traded. So we can have also products which settle, securitized products that settle into these trackers and give you a physical exposure or exposure to the Bitcoin price post the expiry. We also look at then more leveraged strategies to enter the Bitcoin market. And here on the right side, again, call spreads. We have our clients doing, for example, 2021 call spreads. Again, after the rally, they take some Bitcoins off the table, but they put these call spreads on. Again, the green line on the right shows the payoff of the strategy. You are here following the Bitcoin from 20,000 to 30,000. You're following the Bitcoin, But in case Bitcoin takes a significant drawdown, you see on the left the green line is not doesn't follow. So it's simple, a simple call spread strategy, but again, something that we can help someone analyze and pick the right risk profile for them. A lot of focus on risk management and things like that. Here we see investors looking at calls and call spreads, call flight, risk reversals, puts and put spreads, callers with desired cash flow. These are all the strategies that we understand and we can help our clients use the best way for themselves, for their own investment profile. So quickly, where are we going? 2021. We're launching our margin trading framework for options and futures. So we're going to allow a leverage approach, basically more bang for your buck. This is coming Q1 2021. We're going to offer automated quoting of OTC options at some point in 2021. This is also, I think, going to give us some exciting partnerships on the structured product side. We're building the risk management tools for our clients. Second half of 2021, basically just the ability to trade actively and monitor the portfolio for those clients who do not have these systems on their own. And then something that I'm very excited about is Bitcoin-denominated mandates focused on derivative strategies. This is something where we think we can capture a lot of interest from the hodler community, where you have let's say a fund, a mandate dedicated to exploring inefficiencies in the derivatives market that is denominated in Bitcoin. So your Bitcoins are intact and you're receiving the return on top that is basically harvested and risk managed through a set of good strategies overseen by professionals. And so that's where I end my presentation, and thank you all for your time, and back to you, Marcel.
Thank you very much, Andrea. So great. We have now heard all the different panelists. Thank you very much for joining. I'm going to open up the floor. Please unmute if there is a question to any of the speakers, and you can directly address to the speaker then. So you don't have to be shy. I'm sure there's someone with a question.
Yes, I have one. Hi. Maybe I'm not sure
awesome, great.
to which one to address this question, but as you all are very aware, there was this large DeFi hype taking place this year, where a lot of movement in terms of trading, in terms of investment, has shifted from centralized exchanges to decentralized exchanges and all sorts of different investment strategies. And recently, also on the options side, there has been some development on the DeFi platform side taking place with Hedgig, and now Andre Cronje also is working on a DerraSwap solution. What is your view in general, or do you have any view on whether this is something that you as more like centralized finance providers have to look into, whether to also offer something like that? Or do you see this rather as like a playing ground which will not be successful and take on that sort of volume over the next few months and years?
Great, thank you very much. I'm just handing over the questions to maybe one of our external speakers. Please speak up.
Happy to field this one, if that works for everybody. Sure. So I think DeFi is, it's here to stay. Uniswap's been around for a while, and I feel like a lot of the centralized exchanges used to make jokes at their behalf, but now they're overtaking many of the SEC's centralized exchanges in terms of volume. And, I think ease of use is a big part of it. You don't have to sign up for an account. You don't have to go through KYC. You don't have to deposit your funds beforehand. It's just kind of a smoother user experience. I do think that at the end of the day, the centralized exchanges will remain dominant in terms of volume. They'll always be at the head of the pack. But, one thing that we've done at FTX to kind of try to get a chunk of this, of the decentralized exchange pie is we've partnered with Serum and are helping build out the Serum ecosystem, which is a decentralized exchange. We're adding margin trading to it. We'll be adding derivatives trading and futures in the not too far off future. So I do think that this is something that will continue to grow and will continue to see more adoption. And it's definitely an interesting area of the space that I think is primed for more growth.
Perhaps a small addition from my side, Luke from Derribit. What we've seen is the growth of the focus on regulatory matters. So if you look at the past months, for us, the same as multiple other platforms, we've been looking at strengthening our KYC requirements, asking more of clients, etc., which is all not available on the DeFi platform. So I think what you'll see is that the DeFi space will grow because indeed it's a great addition from a trading perspective. However, from an institutional angle, I think those firms will always prefer the centralized platforms. Hence, we are not entering this space as we speak. We have seen a lot of growth in the ETH space during the DeFi boom. So a lot of people are selling their ETH positions for stablecoins, to be used for farming, while they wanted to keep their ETH exposure for the longer run, and therefore they were buying options on our platform. So we've seen the DeFi boom in the absence of a DeFi platform ourselves. We've seen a lot of interest in ETH actually by trading options. So I think overall, institutional space will be dominated by centralized platforms in the longer run.
Thanks a lot for your view.
Great, thank you so much for the questions, also for the answer. Is there any other question? You please unmute yourself. Again, you don't have to be shy. Of course, there is also the possibility that all the questions are already answered through the very well done presentation. So it doesn't look like. And yes, so if no one is unmuting, then I'll take the opportunity, step in, and thanks everyone for joining. Today we had a lot of participants dialing in. And of course, thank you, Luke, Sang, Tim, and Andrea for joining. It was my pleasure to have you tonight. Great insights, a very interesting topic. And I'm looking forward to have this session online and capture even more users and spread the word. Thank you very much.
Great, thank you.
Thanks, everyone.
Thanks for having me.
Thank you very much for hosting us.